the return of authenticity in the digital age. Today in this introductory episode, we're going to talk about what really changed the big tectonic shift that happened in the digital universe with the introduction of blockchain technology, or more precisely, distributed ledger technology. Hi, my name is Chris, and the idea for this channel really came from requests, from questions from our clients, friends, family. And we really wanted to put together with Dukascopy TV and Arcades Digital, a course almost, you could say, on blockchain, distributed ledger technologies, and what it means to live in this new world where cryptocurrencies reign supreme, where a token economy is in the making, and where everyone in the economy is trying to figure out where to go from here and how the future will look like. The episodes are put together in a loose logic order, so I will actually reference some of the other episodes so that you can go back and rewatch them, or for your reference, find other topics that interest you in this whole series. We've titled today's episode, The Return of Authenticity in the Digital Age. Now, what may sound like a massively grand title actually has a specific meaning. Authenticity here is not so much about the persistence of the record or the authenticity of origin of something. It's much more about the transaction. And I want to talk about transactions really quick. So when we talk about transactions, why are they such a big deal? Each time we make a commitment, there's a transaction associated with that. And see, in the old world, before digitization actually, such transactions were recorded in a ledger, in a book. And transactions have been a pillar of our social life, even of life itself. In fact, even the underlying physics of life are transactions, and they're recorded in some way, either in DNA or, in our case, when we have social interactions, in our memories. Like, for instance, when you make dinner plans, you will make a tiny transaction with your friends. It's a contract almost. You say, we will meet at this point in time, at this place, and you will keep that contract by showing up. Actually, if you don't show up, there's a penalty. Now, this transaction is recorded in your memory. When we have more complex transactions, like, for instance, when we're buying a car or two companies merge, these transactions are so complex that, of course, we cannot remember them. So for these more complex arrangements, we make paper contracts. We note everything down. We write down what the what-ifs are. We cover every eventuality, because they're simply too complex and too long to remember. And also, there may be too many people and actors involved in this. For example, a singer records a song. She wants to give a license to this song, and she wants to be able to sell that license to somebody. So everything that needs to be written down will be recorded in that contract and will be made available for purchase. And it will also include, of course, the pricing for whatever the product is, in this case, a license to a song. So that's how we actually operate when we do transactions today. We record them in such a way. In the digital age, we could also do that. We had, of course, contracts that can be digitized. You could make a PDF, you could upload a contract, and you could even try and make some digital signatures, and there are systems to do that. What has really changed now in this new age with digital ledger technology is, in fact, the attribution of certain aspects of that contract directly on the blockchain. So we can commit those facts to a system that is immutable, persistent, and secure. And that has fundamentally changed the way we can do business in this new world. To illustrate that a little better, let's look at your basic bank account. We all know that financial transactions, as we just discussed, are probably some of the most important ones that we can imagine. Now, when I deposit some money in my account, the bank will take a record of that. It will write electronically, digitally in the ledger that this amount of money has been deposited. Likewise, if I pull some money out of my account to spend it, it will be the same, or make any transaction in my e-banking account, there will be a record of that. And these are transactions, they're recorded by the bank. And I have to trust the bank that this record will be perfect, because in fact, there's no one else checking it, right? It's my bank that will make and maintain that record. And not just my record. Actually, it will retain all the records. So essentially, in a way, a bank is just a massive database that records transactions of everything that comes in, everything that goes out, everything that happens in between is recorded in one giant ledger that is controlled by that bank. Now, if we go beyond financial transactions, we can really, really expand that universe. And I think you may appreciate the fact that transactions, like we said earlier, aren't just financial transactions. They can be anything. They can be contracts, they can be documents, they can be certifications. Anything can be put on the blockchain and recorded in this manner. And in a way, we just can cut out the middleman here and make those things available directly to people. So you could have your own little bank in your pocket, basically. You can also have your own little certification authority in your pocket. One thing that's important to remember in this context, though, is trust is still a necessity. And trust cannot be created by the blockchain or by any technology. Trust still needs to be created outside of that technology. The technology itself can transport trust very, very well. So digital records existed for decades, but now with this technology, we can free them from the necessity of having an intermediary that makes them trustworthy, and we can go directly, we can interact directly with those records in the future.